All right, we have another green day on the bubbles, but especially for the bubbles that are moved or are moving because of this Genius Act. And we've got to talk a little bit about this Genius Act because it's an act that is the first step in regulating stablecoins. And I think there's a lot more than meets the eye to this act. And if you look at the bubbles, you can see that tokens like 𝗬𝗏, tokens like Athena, tokens like Curve are flying. But there are a whole lot of tokens that haven't yet started flying that should fly because of this act and what it actually means. And the act can actually be passed very, 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 very soon. Also today, I want to talk about Bitcoin, what the next move is going to be, because a lot of people are saying it's going to break down. A lot of people are saying it's going to go up. I'm going to show you why I think the next move is actually up. And I also want to talk to you a little bit about the golden cross, which is actually about to happen. It's about, I reckon it's about two to 3 days away. So lots to do today, lots to talk about. Big show. Let's get the show on the road, guys. We have another day hovering at these levels. We're at this like 104, 105. I'm looking at it on the 4-hour chart here. You can see just how long we've been hovering. Since May 8th, we've been hovering at these levels. We're now on the 20th of May. So almost 2 weeks, we're hovering at these levels. And now Bitcoin really has to make a decision. I tweeted yesterday, I think that the decision is going to be that the move is going to be up. And the reason why I think the move is going to be up is because, you know, there keeps being bad news. There keeps being reasons for Bitcoin to break down. The markets break down, the stock markets break down. And yet Bitcoin just keeps bouncing back these levels. There's got to be something in that. We're going to go into it a little bit more scientifically today. But what I need you guys to do, I need you guys to obliterate the like button. Obliterate the like button. Let's get crazy on the like button. Let's get the show distributed to everyone. I'm going to bring you guys a lot of alpha today. I want to talk to you about the Stablecoin Bill and all the tokens that can actually benefit. Some of them have started moving, some of them haven't started moving, and there's a lot to talk about. So as I was saying, I do think that the next move will be up. I also think so because we do have this golden cross, which is actually about to happen on Bitcoin. And traditionally, when we get the golden cross, generally, even though we sometimes have a little dump afterwards, like you can see over here, we had like a little dump afterwards. We had a small dump from 77 to like 66 or whatever it was. But then we went up on this absolutely crazy run. There's nothing unusual about that. Actually, Nick, he says in September 2021, the golden cross gave us 51%. In January 23, it gave us 58%. In October 23, it gave us 144%. And in October 2024, it gave us 66%. And that kind of ties back to, I was watching Ben Cowan into the cryptoverse today. And he actually agrees that this one actually is a little bit bullish. You can see we've done a little bit of our own research. We've gone and seen all the golden crosses we've seen. And even though you do sometimes get a slightly small dump after the golden cross, you can see we had one over here as well. Even though you sometimes get a small dump into the golden cross, don't be panicked when it happens because that's usually the last dump before we actually land up going up. There is the counter narrative, and I always like to bring you the counter narrative. This is from Ali. He says, it is time for new Bitcoin all-time highs. Is it time for new Bitcoin all-time highs? Here's what to watch. Price is at major resistance. Hanging man candlestick pattern, a bearish RSI diversion. I must say, we also noticed the bearish RSI diversion and a MACD bearish crossover. So he says momentum could actually be stalling. So let's look at both sides. I'm more inclined to be on the upside. But again, mine's very much anecdotal. It's very much based on emotions and market strength. All right, let's talk a little bit about altcoins because there's a lot happening on the altcoin market. As you can see, we've got a very, very, very green day on the altcoin market. But specifically, the big coins that are moving, I'm going to just move a little bit out of the way. Josh, I must say, this new bubbles looks like absolutely amazing. Eh? I mean, bro, you can click it open. Just have a look at the charts. Every chart now has its own personalized news feed based on the best tweets that our personal researchers have found on the market. You can actually even trade directly from the bubbles, I noticed. So I must say, it actually does look good. I don't usually like to give you compliments, but I mean, when you do something good, I have to give you compliments. Also today, Josh and I are 1-1 when it comes to table tennis games. So it's 1-1 so far. So there isn't a clear winner today. Anyway, so when we look at the people say they use banter bubbles every day. Let me know what you think of the new banter bubbles. Give me your honest opinions in the chat. Really, give me your honest opinions. If you do like it, also, why don't you give us a rating on the App Store? Because it just helps us get distribution of the bubbles. I do think that the new bubbles are absolutely amazing. You still got stocks, which are opening mixed. You can see over here. You can see that you can see the indices over here. You can see crypto over here. You can click on crypto over here. You got the newsroom here. You can actually see the newsroom on your watch list. You can see the newsroom on certain narratives. So if you just want to see like the newsroom on layer ones, you can just click that and then you'll get all the news just on layer ones, and you can do the same thing for ecosystem. So it's really, really, really good. I'll give you a compliment when you deserve it, sir. Anyway, you can see some coins are moving today, and they're moving because we've got this Genius Act, which is a huge act. I don't know if people are realizing just how big this Genius Act actually is. But what the Genius Act is, it's the first step in regulating stablecoins. That's pretty much what this act is about. And there's a good reason why why they're wanting to regulate stablecoins. And I want to show you the reason, because I think that that's what most people are actually missing. But what happened yesterday is that this act actually passed the Senate with a 66-32, which means that about 16 Democrats deflected from the Democrat Party and joined the Republican Party on this specific vote. And to me, this is like the best picture in the whole world. So I want to actually make it a little bit bigger. But look at Elizabeth Warren, who built this anti-crypto army. She's sitting there with her arms crossed, with her lip down, because she was obviously completely against the Stablecoin Act. And the reason why she's completely against it is because she is very much about the incumbents. And this act, this Stablecoin Act, actually gives a lot more power to blockchain. It actually really does move the financial system onto chain. Without this act, you cannot move the financial system onto chain because you don't have a currency. And without a currency, you can't have a financial system. The first step in moving a financial system onto chain is to have a currency. And with this Genius Act, which is really genius, we can move the financial system onto chain. So just a summary from ChatGPT. So it just talks about like what the issue requirements are and says who can and who can't issue stablecoins, who regulates them. It talks about the reserves that you're supposed to have and whether you can keep segregated or joint reserves. Obviously, it's segregated. It talks about the interest and whether or not you can pay interest back to the holders. It talks about all the AML, all the consumer. All the consumer protections, and really it gives you everything that you need to move the financial system onto chain. And it was actually passed yesterday. You can see that you're getting tonight's vote is a welcome and long overdue step in asserting U.S. leadership in digital assets. After playing politics, I'm glad as many of my Democrat colleagues have returned to the table and are supporting a bipartisan product that they helped to shape. By moving forward on the Genius Act, we are one step closer to delivering a regulatory framework that keeps innovation in America and protects consumers and safeguards our national security. That's true, but it's not the whole story. It's not the whole story. And I want to talk to you about why it's not the whole story. Everyone's commenting about this. David Sachs says it's a massive feat. And the process from now, very simply, is the Senate passed. Okay, so that's the first thing. Now it goes to the floor. The Senate will debate the bill for up to 30 hours, propose amendments, and hold a final vote. A simple majority of 51 votes is necessary to pass. Then the House, if the Senate passes the bill, it goes to the House, where it undergoes a committee review, debate, and a full vote, 218 votes to pass. Then they'll be reconciling differences. If the House and Senate versions differ, they must reconcile these differences to produce a single bill. This can be done via a conference committee where members from both chambers can create a compromise version that must vote on again. Alternatively, they may use a ping-pong system. So in other words, they need to reconcile the differences, and then the final bill is sent to President Trump, who can sign the bill. Now, I'm reading that from Eleanor. She says, this is the first big step towards passage, okay? As I mentioned before, the legislation will now move to the debate and amendment process on the Senate floor, which will begin tomorrow night or Wednesday, with the vote motion to proceed. GOP leaders have been hoping to get a final passage vote before Memorial Day next Monday, which means, like, seriously, before Memorial Day next Monday, but unclear if it'll happen at the present time. The probabilities on poly markets that we actually get this stablecoin bill is now 95% it'll happen before the end of 2025. And Scott Melker says that he had a chat to John Deaton, And he says, if the Genius Act doesn't pass the Senate, there will be no meaningful crypto legislation before the midterm elections. So it's a massive, massive, massive act that needs to pass for many, 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 many reasons. One is because it will be the first crypto legislation that is actually passed before the midterms, according to John Deaton. But again, that's not the whole story. The story here goes much bigger. The first part of the story is that in order to get the financial system onto chain, we can only do this when we have a currency. And the first step to having that a currency on chain is this act. Now, this act allows for the US dollar currency to be on chain, right? It's not talking about putting other currencies on chain. It's talking about putting US dollars on chain. And there's a good reason why they want to put US dollars on chain. Because if you put the US dollars on chain, one is that a lot of people will use that as a transactional currency of the internet or of Web3, right? Right now, the transactional currency of the internet is using credit cards. But when we're talking about blockchain currency on the internet, immediate settlement on the internet, there's still, well, there is a currency in the lead, but there's no regulation for that currency in the lead. And now we're getting the Stablecoin Act, which makes the US dollar the currency of Web3 and the currency of immediate settlements over data, over the internet. But again, that's not the whole story. The biggest reason why they want the US dollar on chain is because the reserves have to be stored in safe short-term assets. Now, what is defined as a safe short-term assets that also actually holds yield? What is defined as a safe short-term asset that actually also holds yield? And the answer is, of course, US T-bills, right? So I want you guys to take a listen to this because I think this gives away a lot of the reason as to why they want the US dollar to actually be on chain.
But this is a payment mechanism, and not to be confused with Bitcoin or something that has a speculative component. This puts us into a digital payment framework, the fastest rails available, much better than the system developed in the 70s and 80s, which is slow. It takes days to clear.
So the issue, as far as I've always understood the stablecoin issue, is what is backing this stuff, and how much of it's backed by actual treasuries versus cash versus equities or something else. What does this say about all of that?
It's not going to be equities. It's going to be high-quality, short-term assets, either short-term U.S. treasuries or cash. I think the majority of it will be U.S. treasuries. In fact, what this will do...
The majority of it will be U.S. treasuries. So what is the U.S. actually doing here? They're playing 3D chess. What is the 3D chess here? The 3D chess is if we create the US dollar as the reserve currency on chain, we create demand for US dollars. Where will these dollar companies actually invest their money? Well, they by law going to be mandated to invest them in US Treasury type securities or in Treasury type securities. And primarily, they're probably going to invest them in US Treasury type securities. So by passing this bill, what you're actually doing is you're creating demand for government bonds. In the long term, effectively what you're doing is you're creating demand for government bonds. Now, we discussed yesterday how there's not much demand for government bonds, and that's why the treasury yields are going down. And so what the US is doing here is they're playing 3D chess. They're saying, look, let's create regulation around stablecoins. Let's make the US dollar the ultimate payment stablecoin, right? The ultimate payment stablecoin. Then what's going to land up happening is the issuers of these stablecoins are going to land up having to buy treasuries with the money, right? And you can see that they're anticipating that the market's going to grow to a $2 trillion market, which is about a 10x rise from where we are today. Because today total stablecoins are 243 billion. And I think this actually includes stablecoins that are algorithmic stablecoins, if I'm not mistaken. Does it? Let's have a look here. Yeah, it does. It includes Athena and et cetera, et cetera. So this now takes or is estimated to take $2 trillion of US dollars and put them onto chain. And a large amount of those US dollars will actually be used to buy US debt. And so that's the 3D chess that is actually currently being played. Now, to give you an idea of how profitable these companies are, I think we need to move to the next part of the show, because I think there's another chessboard actually in play here. And that is that there are two major issuers of stablecoins. One of them is Tether and one of them is Circle. Now, there's again a game of chess at play here. 𝗙𝗵𝗆, before Trump came into power and before he was nominated and took up the position, he invested and bought a 5% stake in Tether, which we know is not currently operational very much in the United States or not located in the United States. Then you've got Circle, which is the other big issuer. One issues USDT and one issues USDC. Their business model is a very simple business model. Raise money to issue USDT and USDC, take that money and invest it in treasuries, and then own the interest on the treasury, on the assets. So, for example, if you want $1 million of USDT, you give them $1 million, they give you $1 million of USDT. They take your $1 million and they invest it, in US treasuries. And what they do is they land up earning like 5% on the US treasuries. They land up earning like 5% or 4.5% on the actual treasuries. Let's say between 3.5% and 5% on the US treasuries, depending on the duration. Because I think on the 1 year, let's just quickly look at the 1 and 2 year yield treasuries. Just see what the US 02 is at the moment. So 2 year treasuries are just under 4% at the moment. They're 3.998%. So what these guys do, that's their business model. And right now, what we are hearing that there is a bid for Circle. So Circle is the major issuer. And that right now what we're hearing is that Circle is getting bids from Coinbase and from Ripple. They're basically fighting over who's going to buy Circle, if anyone. Because at the same time, what Circle is actually doing, it is pursuing an IPO. So it's pursuing an IPO, but it's also looking to sell at a price above $5 billion. So at a price above $5 billion, they are looking to sell. You can see I've heard this from multiple sources. Funny enough, Brad Garlinghouse says, "Oh no, he's heading to DC to champion pro-crypto legislation." That said, Senator Loomis won't reschedule. Actually, isn't returning his call. She's ghosting him. I think that we need Coinbase to get this and not Ripple to get this. I don't know if I'm comfortable with Ripple having or owning the major US regulated stablecoin issue. I don't know if I'm that comfortable. So for me, I really want that. I actually really want, if anyone, I really want Coinbase to get this. Let me give you an idea of the size of the numbers here. So Circle reported 1.68 billion in revenues last year. I've got a little bit more of an income statement for you here, done by one of our researchers actually. You can see that they've got revenue of about 1.64, 1.67. They've got distribution costs, which, by the way, a lot of those distribution costs are actually paid to Coinbase, right? And then you can see that with all these numbers, they come out with a slight profit. Not a very big profit, 220 million in profit. On the other hand, though, you've got Tether, right? And Tether, on the other hand, makes huge profits. They made $13 billion in profits. $13 billion in profits in 2024. I mean, that's a huge number, and they make that number actually through getting interest on the stablecoins. Okay, so let's look at who the biggest winners and the biggest losers are. Obviously, if Coinbase lands up getting Circle, then that's very, very, very good for their share price. Let's actually look at their share price over here. Let's look at the Circles. $261.70. Remember, they're starting to trade on the S&P this week, I think. They're starting to trade on the S&P, I think, sometime this week. Is it this week? I think it's this week. The other winners. Okay, so the biggest winners of all of this, of course, are going to be the L1s, because the L1s, where most of the financial system gets moved to, are the ones that are most greatly going to benefit. Starting off with basic stablecoin transactions, but actually moving to, so the first part of the stablecoin thing is just going to be payments. I pay you, you pay me. The second part of it is that we're going to move the financial system onto the L1s. So you're going to move lending, you're going to move borrowing, you're going to move all that stuff onto the L1s. And so when you have this, who are going to be the major custodians? So the first one is ETH. The second one is Tron. You can't actually ignore Tron. I want to show you the stablecoin numbers so that you get an idea of stablecoin supply by chain. So that's the stablecoin supply by chain. So you got Tron over here, you got ETH over here, and then you can see Solana is. Let me see if I can get this a little bit bigger. That's going to give me a CSV file. Let's see if I can actually I don't know if you can. Okay, so you can kind of see it over there. I think I might even have it over there. So you can see you got 50% of all the stablecoin issuance. You've got that on ETH. 31% of it is on Tron. Then you've got 4.83% on Solana. Why am I showing you this? Is because you can't really write off Tron. Tron, because they were so fast and so cheap before Solana came around, actually managed to grab huge market share of stablecoin transactions. So I do think that there is a case to actually look at Tron again, TRX. I really do think that you can't write. I mean, as much as it's Tron, and like you cannot write off Tron. You cannot write off the fact that they have got major adoption when it actually comes to stablecoins. So if you look at stablecoin transactions, in other words, not the amount of stablecoin, but the number of transactions by blockchain. So you can see there you've got Tron with over here, you've got ETH over here, you've got Sol over here, and then you've got like rats and mice, or rats and mice all the way up here. So the first beneficiaries here are obviously the L1s. But then you've got other beneficiaries. And you can see that if you look at the bubbles today, the other beneficiaries have actually started to move. So things like Aave, things like Curve, right? Those are actually starting to move because of the Genius Act potentially being passed. You've got Frax. You've got all the real DeFi plays actually winning. Why? The reason why the DeFi players are actually winning is because we're actually moving the L1, we're moving the traditional financial system onto chain. Now, one of the tokens that we've had in our portfolio for a long time and is actually starting to really pay dividends is actually Curve. But most people don't really understand what Curve is and why it's important in the stablecoin ecosystem, why I put it in the portfolio. And I thought I'd just break that down for you guys a little bit. So the first thing is if you look at Curve, Curve is actually a DEX. Pretty much it's a DEX. But the DEX actually keeps on, the DEX actually specializes in assets where small bleeds are, where you need very, very, very small, let me see if we can find this for you. So let me try and disconnect. Let me try and, give me 1 second. Let me try and disconnect the wallet just so I can actually show this to you. So, okay, so I think I'm disconnected now. Let me go back to curve.finance, and I actually want to show you what Curve actually does, because a lot of people don't really understand the thesis as to why I'm so bullish on Curve. So the reason why I'm so bullish on Curve is because if you look at these assets, the assets that Curve is a DEX, but instead of trading against another person, you're trading against a liquidity pool. Now, in Curve specifically, the liquidity pools are made up of assets which are similar in nature. So like, for example, you'd have like a Curve USD and a USDC pool, and you'd have like a ETH and an ST-ETH pool. And the reason why those are paired together is because there's not much movement between those two assets. So it's not like based on a DEX where you're counter paired with ETH. Here, the pools are literally assets which are very, 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 very close in nature. And the reason why you do that is because there you can have very little slippage. The minute that you pair it against another asset, you pair like a risk coin against another coin, then you get a lot of slippage. So I'll read you this. It says, let me see if I can actually just see if I can find this tweet for you guys. Here it is. It should be here. Okay, so what is Curve and how it works? Well, it's one of the most popular long-standing platforms in DeFi. It's an automated market maker DEX that handles trades using liquidity pools instead of order books, which means that you trade against the liquidity pools directly. But it's specifically built for assets that are supposed to stay close in price. And that is where Curve actually basically wins. The token price is calculated based on an AMM algorithm instead of an order book, and it only pairs similar assets, which allows for tighter price bands and less impermanent loss. And therefore, because of the less impermanent loss, the people that contribute to the liquidity pool expect less value, and therefore you get very, very, very low slippage and very, very, very low fees. And the reason why that's so important when it comes to stablecoins is because if you're swapping one USDC for one USDT, you can't afford to pay high fees on a transaction like that, and you can't afford to have high slippage on a transaction like that, because you're literally trading $1 for another dollar. And right now, Curve has the most optimized spreads between stablecoins. And that's why I think that Curve, for me, is like one of the big winners, and you can see that the market is currently rewarding Curve. The other big winner, as you can see, the market is rewarding, and that's Aave. And the reason why Aave is being rewarded by the market is because it is currently the biggest player in DeFi. It is the biggest player in DeFi. It has the most real TVL locked in DeFi. And if you move the financial ecosystem onto chain, then 𝗬𝗲 is the one that will actually land up benefiting from the most lending and the most borrowing transactions. The third one, which is benefiting quite a bit, not as much as it was earlier, is Athena. And again, the reason is because there's going to be so much more trading in the market. There's going to be so much more of these algorithmic stablecoins that Athena is actually going to land up benefiting from all of this. So I think that it's a very, very, very big, I think it's a very, very, very big move, the Stablecoin Act. I think we need to watch it get passed. I can't really see it not passing, but I think it'll pass. But let's watch. And if it does pass, I do think it's the most significant piece of regulation that is going to actually get passed. So that is the Stablecoin Act. If you want to read more about it, there's a link below to Good Morning Crypto. I'll show it to you quickly just so that you can see. Good Morning Crypto is our free newsletter. Literally, you can, oh, Josh is going to catch me for watching table tennis. The algo has caught me, bro. You see, I'm learning how to spin now, bro. Let me actually go here so you can just see it. Let's go. Let me actually go. You can see over here. You can see. I want to show you two things. So the first thing is you can subscribe to our free daily newsletters. They're over here. You can subscribe to the free daily newsletters. The second thing that I want to show you is, and here I kind of need your help. So 𝗕𝗬𝗕𝗏 and I are launching a brand new Intro to Crypto course. Now, this course is probably not for you guys watching the show because you guys know the basics of Bitcoin and Ethereum and what is Solana and what is the wallet and stuff like that. But in 2 weeks, we're having the first workshop of our Intro to Crypto course. Now, Intro to Crypto is an absolutely free course. There's no charges. There's nothing like that. We literally have a mission of bringing people into a safe place, right? So we want to bring people into a safe place where they don't get scammed, where they don't get told to buy stablecoins, altcoins and meme coins. Here, we just want to teach them the basics. What is Bitcoin? What is Ethereum? What is an altcoin? Where to trade? How to trade? Etc. etc. If you know anybody that wants to do a course like this for free, it's our first course ever. Get them to sign up using this link. It's the first free course. Let them sign up using the link. And I really want to see if I really want to get their feedback on the first cohort to see what they think of the course. Anyway, so with that said, let's quickly just have one last look at the market. I see Bitcoin is at 104, 105. I see the stocks are mixed or actually slightly down on the stocks. Let me show you quickly. Stocks are slightly down. Not really much more happening out there. All right, so I'll see you guys again tomorrow. Until then, trade well, my friends.